Hi guys, it's Stock Curry, and a lot of news came out over the weekend that's going to move the stock market on Monday. I'm going to let you know what that news is and what other news you need to watch out for this week and how you can best trade it. So let's get into it. Let's start with some of the individual stock news that's going to move the market on Monday. Then we'll get into the general market news that should move the entire market. On Sunday, Tesla reported 422,875 deliveries for the first quarter of 2023. Now, Tesla was widely expected to report record deliveries this quarter, and in fact, they did. And that's one of the reasons why we saw the stock price rise so much last week, especially that 5-6% rise that we got on Friday alone. It was all in anticipation of Tesla reporting exceptional delivery numbers and having another record quarter. But now the question is, what happens to Tesla stock this week? Does it rise after this blowout quarter for deliveries? Or was this a buy the hype, sell the news event, and Tesla's going to go down this week? Well, it's important to understand that while deliveries were up 36% year over year, the uptick in vehicle deliveries came at the expense of price cuts. The delivery results also topped fourth quarter deliveries by about 4%, but they fell short of the expectations of analysts. Remember that I said that Tesla ran up last week in anticipation of them reporting record deliveries above and beyond even analyst expectations. And while they did report record deliveries as expected, they did not meet analyst expectations. So actually, those delivery results came in low based upon what people were expecting. And there's a good chance that Tesla possibly sells off this week because the deliveries were below expectations. Even though they were a record, they were lower than expected. And it's a lot like earnings. The earnings, if you can compare it to that, if earnings expectations come in lower than expected, even if it's a record quarter, the stock can still sell off. And that's kind of what we're looking at here is the stock ran up so much last week in anticipation of a certain number. When it falls short of that number, it's most likely to sell off. Now, of course, we're talking about Tesla here. This is one of the most hyped stocks in the stock market, and anything can happen. But based upon the fundamentals, technically they should sell off. Now, I want to move on to another stock that I mentioned last week in a short that I put up, and that stock is Virgin Orbit. Virgin Orbit is essentially bankrupt, and the short that I put up essentially talked about how 99% of the companies in the stock market eventually go to zero. And this isn't saying that all companies are going to zero by the end of the year. This is just saying that over the course of, say, 100 years, the fact of the matter is companies just don't last that long. And in the short time, you're always going to have a select few companies that go out of business. Every single year, no matter how bullish the market is, companies go out of business. And Virgin Orbit is the latest victim, but they're also one of the largest victims in recent memory. So I want to talk a little bit about what happened to Virgin Orbit and talk about some lessons that we as investors can learn from this. So let's talk about what went wrong with Virgin Orbit and how their valuation tumbled from $10 a share in 2021 down to 20 cents a share on Friday. That's a drop of $4 billion down to $100 million in just a little over 2 years. Virgin Orbit went public via a SPAC. This is a blank check company. These were very, very popular back in 2021, and today they're almost non-existent. And today, Virgin Orbit is on the brink of bankruptcy. The company has halted operations. They've laid off nearly their entire staff. and the stock was trading at around 20 cents on Friday, leaving it with a market value of only $74 million. Well, Virgin Orbit touted itself as a flexible and alternative approach to launch small satellites. And this created a lot of hype around the company. A lot of people were talking about it, buying the stock. And this was back during that great hype period in 2021. But unfortunately, the reality of these unprofitable companies is that this company, Virgin Orbit, and many others like it, are unable to reach the rate of launches necessary in order to generate the revenue that it sorely needed. In other words, when a company is unprofitable, it has to increase revenue. And if it's unable to do that, it has to borrow money or do share offerings. And if it's unable to do that, it's bankrupt. It's out of business. So the lesson to be learned here is that exciting or even innovative technologies do not necessarily equal great businesses. So just because a lot of investors are getting really excited about a new upcoming technology, AI, does not mean that it's necessarily going to make a great business. And don't get hyped up and fall into the same delusion that so many people fell into in early 2021 of buying companies just because they're hyped up and they have all these great future potential to make a lot of money and be disruptors in the business place, because it doesn't necessarily translate to being a profitable company that can stay in business without doing a ton of share offerings that dilute the share price and absolutely destroy the stock. Great ideas do not necessarily make great businesses that you would want to invest in. And this is very important to understand. You have to look at the company itself and make sure that it actually has a chance of becoming profitable and growing not only in revenue, but also in earnings in the future. This is why Warren Buffett says, I don't invest in stocks, I invest in great companies. And you too have to look at the company to make sure it's a great company and not just look at the stock, not just buy into the hype, not just buy into the FOMO or the fear of missing out of these incredible, huge returns, but look at the company and ask yourself, can this company really be profitable? And can it actually grow into the valuation that the stock price is currently at? And more often than not, you're going to find that the answer to that is no, especially when a stock is being hyped up and people are buying it and running it up into insane valuations. Some of the companies I can think of that have run up to insane valuations recently over the hype around the future technology would be AI stocks like AI, BBA, even NVIDIA and AMD are running up to just insane valuations around all this hype. And if you were trading back in late 2020 or early 2021, you remember what happened to all these stocks that ran up like crazy. They got destroyed later in the year. It's not a question of if those stocks are going to come down in price. It's a question of when. Now let's talk about some of the market news that's going to move the overall markets. Everybody is looking at this economy saying we're going to avoid a recession because the labor market is strong. Yet, if you just ignore the labor market and look at every other indicator, it's really bad. And one of the things that's going to make this even worse and just send us straight into a recession is the fact that millions of people are going to start losing their Medicaid coverage as this COVID safety net is dismantled. Low-income workers are already struggling just due to the fact that inflation has caused the price of things to go up significantly. And a lot of those jobs just are not keeping up with the cost of inflation. So unfortunately, this is just another hit to low-income workers. And this is one of those things that's just going to really start and just send that recession ball down the hill and really cause it to grow until it just crashes at the bottom of the hill in what ultimately is going to be a hard recession, or what's known as a hard landing. Now, everybody's looking at the job market and saying, hey, but the job market is strong, therefore we're not going to get a recession. Yeah, it's true. The job market is strong because of this really weird situation that we were in because of COVID. But the reality is every other financial indicator is screaming recession. And you can see that in the way that the banks are now struggling. These problems, they're going to spread throughout the rest of the economy. And just like the hype that will eventually die, it's not a matter of if we're going to get a recession. It's a question of when are we going to get a recession. And another thing that could help kickstart a recession and cause inflation to go back up is oil prices. And over the weekend, OPEC Plus announced a surprise oil cut, while the U.S. called the move inadvisable. Yeah, nobody cares what the U.S. cares about. Oil was up about 5% as of the recording of this video. Of course, this is going to send the average cost of gas back above $4 a gallon fairly quickly as OPEC Plus cuts production in order to get oil prices back up. We could be seeing $100 a barrel oil here pretty soon if these production cuts continue. Now, the last time oil got really expensive, here in the United States, President Biden released oil from the Strategic Petroleum Reserves. Unfortunately, that SPR is now at its lowest level in the history of the United States. And President Biden is physically unable to release any more oil. As a result, he will be powerless to stop the rise in oil prices that is coming, and he will be powerless to stop the rise in gasoline prices that is coming. And this means that Americans are going to find out the true cost of oil and gas, and it's not going to be subsidized by the president any longer. And this is really going to cause inflation to skyrocket. Of course, what the Fed does with this is hard to say. The Fed doesn't really look at oil prices when it considers how much to raise interest rates by, because the Fed has no control over oil prices. The Federal Reserve is really looking at their core PCE, which is all of the inflation minus food and energy, essentially the things that they can control through monetary policy. So it's probably not going to have a huge effect on whether interest rates go up or down or whatnot, but it's still going to hurt Americans in a big way. Now, all of that said, what is the stock market going to do with all of this? Well, the stock market generally goes down when oil prices goes up. And with oil prices jumping 5%, there's a really good chance that the stock market is going to sell off on Monday. Now, I just want to be clear that just because the stock market should sell off on Monday, that would be the logical thing for it to do. And even if you look at the technicals, the S&P 500 hit $410, which was a 38% Fibonacci retracement level. It's a technical resistance level that the S&P generally bounces off of and will go back down on. Just because the stock market should sell off on Monday does not mean that it will sell off on Monday, but probably a 70% chance that it will. I would certainly place a better bet on put options rather than call options if I was going to play the market this week. But again, we'll just kind of have to take it day to day and see what happens, because the psychology, the market sentiment, the market psychology right now, very bullish. So we'll have to see if those very bearish fundamentals end up butting up against those very bullish psychology and see what wins, market psychology or fundamentals. All last week, market psychology was winning in a big way. Now let's talk about the economic reports and the Fed speakers that are coming up this week and see what is going to move the market this week past Monday. Well, on Monday, about an hour before the market opens, we've got the St. Louis Fed President Bullard speaking. Then at 10 a.m., we've got our ISM manufacturing data. And then at 4:15 p.m., about 15 minutes after the market closes, Fed Governor Cook speaks. Then on Tuesday at 10 a.m., that's about half an hour after the market opens, we get the job openings for February. And then at 6 p.m., we get Cleveland Fed President Mester speaking. Then on Wednesday at 8:15 a.m., we get the ADP employment report. That is for March, and that's going to show us our private payrolls. Then at 10 a.m., we get the ISM Services Index for March. Then on Thursday at 10 a.m., we get St. Louis Fed President Bullard speaking. And then on Friday, we get the monthly jobs report for March. This is going to include the unemployment rate and the average hourly wages. And while all of these could move the markets each and every day, it is that jobs report on Friday that will be the biggest market mover. Although the preview, which is the ADP private payrolls that comes out on Wednesday, will also be a pretty big market mover. So expect another very volatile week this week. And if we get any indication that that ultra strong labor market is starting to weaken and we might be getting one step closer to a recession, watch out, because the market is not going to like that. On the other hand, we might rise on weak job data because the market might say, oh, yay, that means the Fed is going to cut interest rates, even though they've said like 5 times now that they won't. The market right now is fighting the Fed. There is an old saying, don't fight the Fed. But right now, the market is fighting the Fed, and right now, fighting the Fed seems to be working out pretty well. We'll see if it continues to work out well. Right now, the market just is not trading based upon the fundamentals. It is trading off of a lot of bullish hype. So be very, very careful, because usually these bullish hype cycles where we get a lot of speculation, they usually end in disaster. So stay on your toes this week, tread carefully. I wish you the best of luck and success trading. If you guys want to make money with us and know what we're buying and selling, one of our coaches in the Discord made over $15,000 last week. And trust me, he does not have a huge portfolio. He doubled his money last week. Guys, if you want to make this kind of money and grow your portfolios with us, of course, there are no guarantees. Most people do lose money, but at least you'll have a chance and get a little bit extra knowledge. If you guys want to learn how we trade stocks and how we make money, I currently have a 20% discount on the VIP coaching program. That's our We Profit Day and Night coaching program. That 20% discount is an Easter sale. It is good through Easter Sunday. If you want to take advantage of that and get 20% off the entire program, schedule a call with my onboarding specialist at weprofitdayandnight.com. That's weprofitdayandnight.com. I hope you have a lot of success trading. If you got a lot out of this video, then be a good friend and share this video with your friends and family so that they will know what's going on in the market this week as well. And share this video on your social media pages. Don't just keep it for yourself. Let everybody you know about this channel and all the great news and information that we provide here. And don't forget to hit the like button and subscribe. And if you're on YouTube, click the bell icon and click all, even if you are subscribed. That way you'll get notified of my next video. And if you missed the stocks that I bought last week and all the information that I put out, make sure you watch the last video that I uploaded here.